Hey, good morning, folks. Happy Monday. Interesting week last week. I mean, that's for sure. We got the pullback that we've been kind of waiting for over a month, where we got a nice pullback, and that's kind of what's happened here. Um, in a lot of ways, we kind of we possibly may have double topped here. I personally don't think so, but we don't really get paid on our opinions. Only the price action matters. And so, right now, there's bullish cases and bearish cases. A lot of people could say, we double topped here. We filled right at resistance when we were overbought. And on another side, people might be just saying we're having, just a regular pullback that happens in all bull market runs. And so, those are the two ways we can play. Right now we are right on support. So, I'm not that. Um, I'm not that shaken about anything just yet. You know, uh, Supports don't always hold, as you can see here. Otherwise, we'd bounce off every moving average, in any trend ever. So these are just things that we want to be wary of. I guess the big key today and for the coming week is, do the bulls defend, these areas of support, and do the headwinds that we are facing, on the macro side and on the news side, are they enough to take us down? As we saw last week, one of the big headwinds that we were facing was, we had a nice squeeze in the U.S. dollar. And so, there's kind of a little bit of a bottoming formation here. Maybe the U.S. dollar is done going for a while. The QE2 news, the POMO news, that just was not enough last week to raise us up. And usually, the QE2, the POMO, that's always enough to at least put some support in the market, if not get us a good bid. And that's been faded now. So now we need a new catalyst. So now we've got some headwinds. We've got the dollar strengthening. There's still a lot of doubts on the QE2 news, and we're getting a significant news headline coming from overseas. Number one, what it looks like, Ireland or Irish banks are going to need to be bailed out. And you're getting a lot of chatter from Chancellor of Germany saying, there's going to be measures. It's not just going to be a free cash type of U.S. bailout. There's going to be some punitive measures taken against Ireland, if this needs to happen. So, a couple things we want to keep an eye on. Obviously, the headwinds are the news cycle, that the QE2, the POMO, the effect is just, it's lagging now. We've used up kind of our POMO card for a while. Also, we want to keep an eye on overseas, and we're starting to see a pickup in the VIX. And I'll tell you what, it could take really just one piece of raunchy news overseas to really send the VIX back to 25. And above 25, we get ready for breakout mode. So these are things you want to see. On the other side, what we really do have to keep an eye on too is, even on the Dow, we did break through the 20-day. Who knows? We might not, you technically might not find support till 1100. So we keep an eye on some of this stuff. Not all the indexes look the same, obviously. Nasdaq very similar to the S&P. Russell's still holding up. Russell is holding up, which is at least a positive for us, since this is what we trade. But we did see a lot of damage underneath the market in terms of individual stocks. So let's be tight. Lessen your position size for the next few days. At least that's what I'll be doing till we regain some strength in the market. And then when you see strength, it's one thing to go balls in, but when you see weakness, it's always good to cut your position size and sell on profits quicker. That 20% gain might only run for 10%, or that 10% gain might run for 5%, and you really want to tighten up and keep raising up your stops and just sell basically a lot quicker. Just taking a look at oil. Oil, we had the nice breakout over the 200-day and this price resistance in terms of the range we're in. We've pulled right back to support, so let's see what happens this week with oil. Oil's kind of led the market here, and we're at this big level of support, basically, where we have price for support. We've got the